Welcome back. Now, National Treasury held its first Climate Resilience Symposium. It's emerged that South Africa's public finances have taken strain due to worsening climate change issues. Business costs have grown, competitiveness has weakened, and employment opportunities hindered. Steve Nicholls, the head of Mitigation on the Presidential Climate Commission, joins us now to hone in deeper on the economic consequences of climate change. Steve, a pleasure. Good afternoon.
Yeah, good afternoon. Thanks for having me.
Well, Steve, maybe let's start off by reflecting on the symposium and why it is an important, event and conversation to be having in South Africa at this time.
Yeah, so as you said in your introduction, climate change has significant economic consequences for the country, which means it has significant budgetary and fiscal consequences for the country. So it's critical that Treasury come together both internally across the departments of Treasury, but also with other government departments and other stakeholders to think about these consequences and how we deal with them.
With that said, of course, South Africa has always acknowledged that our transition has to be just. So we were always trying to take stock of more than just, mitigation strategies and adaptation strategies, but making sure that we kind of bring everybody along. But is it proving, Steve, to be that a very exercise and complex, project for South Africa?
It's incredibly complex. The transition of the economy affects every part of the economy. So we think about how climate change might impact the economy. If we look at the floods in Durban recently, obviously it damages infrastructure, it washes away roads, it washes away bridges, it washes away people's homes. And that money has to come from somewhere, to rebuild that part of the city. And so that comes out of the fiscus. And that means that there's less money available for other things. And so we have to be able to try to preempt these things, make sure that we have the right kinds of budgetary allocation. But as you also said, it impacts productivity and competitiveness. Hotter climate means less water, which means lower food productivity, which means we have to import more food, which has an impact on balance of payments and exchange rate risks and all of these kind of complexities. But also we see other countries in the world changing the things that they consume and therefore the things that we can export to them. And so we're seeing a drop off in exports on certain commodities. We're seeing countries like the EU and the UK starting to impose border tariff adjustments. So you have to pay a tax based on your emissions intensity. So it really does come down to how the economy works. And we also know that the impacts of climate change have the biggest impact on the poor. They have the fewest resources to respond. They have the fewest resources to recover from a tragedy. And so when we're thinking about how we transition our economy to be more competitive, we have to be thinking very much about the people of the country who are most affected by those changes.
What can also happen to a country like South Africa, Steve, is we've been responding to an electricity crisis, which of course also has an impact on productivity, also has an impact on the most vulnerable citizens here. And we can sometimes get bogged down with the crisis of today and maybe lose sight of how, we should be transitioning. And maybe that's what makes our situation a little bit more unique. It's also having the capital to respond today while trying to have the capital to build towards tomorrow. And I'm keen just to find out how we are thinking about that as a country.
Yes, absolutely. We have a number of short-term challenges that we have to solve at the same time. So when we think about climate transitions, which is why I said, it affects the whole economy. It's not just the parts that we think traditionally about climate. And so we have to solve the electricity system. And that includes things like free basic electricity. And to solve free basic electricity, we have to solve some municipal capacity issues. We have to be able to solve updating the indigent register. We have to be able to solve internal budgetary mechanisms. And so one of the big factors that's come up in the conference here is the way we fund and manage municipalities and local government is a big part of how we respond to climate change, given that the impacts both from a trade competitiveness and a climate impacts perspective are happening at that level. So a lot of the discussions we've been having is about where do we source this finance and how do we distribute the finance across the economy? How do you make balance sheets of national entities stronger so that we're able to invest in a future economy that's competitive and that addresses the triple challenge?
I'll tell you that up to date, it feels like the climate conversation has possibly rested with departments of energy and minerals, or maybe even environment and forestry. It does sound like we're now seeing it at the center of National Treasury. Is this a new shift? And I think it's a very interesting one because, of course, where our money is where our hearts will be.
No, exactly. So I think that it's possibly not new. Treasury have a number of activities that they've been doing for some time. They recently published the Green Taxonomy, which is intended to focus capital more broadly on green industrial issues. They're looking at budget tagging. How do we more effectively track what's going on? Obviously, the carbon tax is something that's been around for some time. But I think the shift that we're seeing now is that recognition that you speak of, that this is fundamentally a monetary and fiscal issue. And so how do we start linking up all of the different components of government? And then, as you say, Treasury becomes the center of that. But we're also seeing this discussion happening in other government departments like trade, industry, and competition, because as we evolve our economy to produce things that are more competitive, obviously that's sitting firmly in DTIC. So it is very much an all of government effort, but we also like to say all of stakeholder effort, because this has to involve labor, civil society, communities, etc.
Steve, we can also speak about investment into climate change. Globally, I don't think there's a debate about funding mitigation strategies. There's also no debate about funding adaptation strategies here. But loss and damage funds, that's been a very tricky one. And I think one that, developing nations like ourselves and the rest of the continent can really use at this point, just grants in the form of those countries that have already, gone on to build their economies there. And I'm wondering, how we're thinking about it as a country. Do we have an absolute position on issues of loss and damage?
So that's an evolving game, to distinguish for the audience. Adaptation funding is for reacting or building resilience to climate change impacts, and try to be preemptive about it. For example, not building homes in flood zones. Whereas loss and damage funding is funding for people to recover from climate disasters. And so, the theory being that most of the damage has been caused by heavy emitting countries around the world, and therefore they have a responsibility to help countries recover. So it is an area that South Africa has an active team working on, both within the climate change negotiations and within Treasury, so within DFFE and within Treasury. But as I say, it's an evolving space, and it's not too clear yet, even at an international level, how loss and damage will be structured and the kinds of capital that will be available. But it's a key topic for the upcoming COP at the end of the year.
And Steve, before I let you go, is it safe to say that at this point, we finally have all and most of the stakeholders in the room speaking about issues of climate change? And, maybe it's important for us to figure out where climate change issues actually rank on the list of priorities within government. It can sometimes be something that is like an afterthought. But when we look at what's happened in KZN, in the Western Cape, the Eastern Cape over the last few months, we simply just can't afford to have it, kind of chucked at the bottom of the agenda anymore.
Yeah, we're certainly making a lot of progress. I wouldn't say we've got all the stakeholders yet, but we're making really great progress. And the fact that we're talking about such central issues as how do we integrate climate change into how we set the budget, how we measure the performance of government, how we develop partnerships in business and government, how we need to reform the PPP frameworks. These are fundamental conversations to how we make progress, and it's really been encouraging the last couple of days to have so many influential people engaged.
Absolutely encouraging indeed, Steve. Thank you so much for talking to us about this. I think an important one in South Africa at this time. That was Steve Nicholls, Head of Mitigation on the Presidential Climate Commission.